So we can define this and say these are policies and procedures. Policies and procedures. These are policies and procedures put in place to guide the preparation of financial statements. So it is the guidelines which it helps us to meet the standards of the accounting. Meet the standards of accounting, because there are some set standards which the accounting are set for us. So we will follow these rules for us to reach these accounting standards. So the ladies, you have also to set for us the procedures which we should follow for us to reach your standards. So you don't need to demand the standards, and yet you have not shown us that route of achieving that standards. So we have these standards are classified into two. See, they are classified into two. They are classified into two. Number one is we have the standards which apply in a private sector. So we have a private sector. Private sector standards. And then to number two, we have public sector standards. We have public sector standard. Private sector standards, this is the company, like the difference between public and private. This one is owned by individual. When we say private, it is owned by the individual. But when you say public, it is owned by the citizen. It is owned by the citizen. So we have the rules which they have been set for accounting standard for the private companies and for the public companies. So what are some of these examples of a standards of a private entities? Like the IAS. So if you check the notes I've given you, the comprehensive one, each topic they mention their standards. You will find one of it, IAS 2. IAS 2 is for the inventory. It shows how do we value our inventory. You will find another IAS or IFRS 1. IFRS 1 is for preparation and presentation of financial statement, which it will be changed in, they have already been changed to IFRS 18, but it will be effective in 2027 January. But still, we are still using it as IFRS 1. We have IAS 7. That is the preparation of cash flow. How do we prepare the cash flow? So this standard will guide us on when we are preparing the cash flow, we should start with what? Operating activity, we go to the investing activity, we go to the financing activity. That is the guideline of the standards. That is the guideline of the standard. And the beauty thing of accounting standard is it cuts across the world. So huwezi pata ati accounting ya Australia or different na accounting ya Kenya. No, it cuts across the world. The public sector, this one, it governs the preparation of the financial statement of public entities. And in most cases, you find we normally call IPSAs. So we will not dwell much in accounting, in financial accounting for the public sector accounting, Now, so examiner will not ask you to define this, but it will ask you what is the benefit or objective of this standard. That is what the examiner will ask you. So let's see the objective of the accounting standards. Objective of accounting standards. Objective of accounting standards. What do you think would be the first objective of the accounting standards? Any opinion? Why do we need this standard?
For uniformity. Because when you have when a statement or rather any document from the accounting is shared to any department or any other company, it is legible. So if once maybe the statements are coming from different companies, you can be able to compare even if you're not there. You can be able to, because they are all the same.
Yeah, they are all the same. So, like, so it brings what is called the uniformity, right?
Yes.
So, if you take the company financial statement of company X and company Y, you will find that they are the same. Profit and loss, they are the same. So, another objective is maybe to help in interpretation to help in the interpretation. Remember, when we are doing accounting, we say that the users is not only the owners of the company, even the government, right?
Yes.
Even the customers, but these people, they don't have the accounting background, so
yes.
They don't understand. But if they want to understand the technicality of the accounting, then they can refer to the accounting standards. Yes, so it will help in interpretation of technical concept in accounting. So I can call it, these are the main objective of accounting standards. The main objective of accounting standards. So we are done with topic 1 and topic 3. We are done with topic 1 and topic 3. Remember to be answer later.
Yes, sorry?
Like classes tumeanza late, so sitakupea break.
Ni sawa, kuna shida.
So that we try as much as possible, we finish within the time limit. So I will introduce the fourth topic, that is accounting for assets and liabilities.
Okay.
Now, this is now where we have to do calculation. So maybe I give you 5-minute break, then to answer. You see, accounting is a new topic, yeah? Accounting for assets and liabilities. Accounting for assets and liabilities. So we are going to cover a quite number of them here, including what we cover in this topic is non-current assets. non-current assets, we are going to cover the cash in hand and at bank. We're also going to cover the payables. Those payable is a liability and receivables. Payable and receivable. So this is what we are going. We are not going to cover. Yes, in the topic we have the prepayment and accrual. Prepayment and accruals, but we are not going to. There is no specific topic for accrual. This is part of the adjustment in the financial statement, which we do a lot of adjustment for the prepayment and accrual in the question. So let's start with the non-current assets. Non-current assets, specifically property, plant, and equipment. Specifically, property, plant, and equipment. So start with the non-current assets. Non-current assets, specifically property. We are going to look at the property, plant, and equipment. Property, plant, and equipment. Property, plant, and equipment. So examiner requires you to prepare this schedule of a property, plant, and equipment. So we will define the schedule of PPE. You can just say this is a property, plant, and equipment schedule. Property, plant, and equipment schedule. So let's define and say the PPE schedule. The PPE is a short form of property, plant, and equipment. So the PPE schedule shows the movement. It shows the movement of non-current assets. It shows the movement of non-current assets. That is acquisition, disposal, revaluation, and depreciation. Revaluation and depreciation. Let's see what is a depreciation. So a depreciation is simply a loss of value of an asset. It's a loss of value of an asset, maybe due to number one reason why an asset lose its value to the usage, due to usage of that asset. Another one is time. The more you stay with an asset, the more it loses its value. And also time and, can just say, and obsolescence. How do we write obsolescence? Obsolescence or outdated. It is out of the current theme of the technology. We say it's obsolete. Solence. So that's what it's meant by the PPE.
Excuse me, sir.
Yes.
For a minute, let me be able to write what you have written. I've not written. Let me usirab. Let me write that particular part.
Great.
Yeah, we can continue.
So let's have the format. I think we will write the format and then we will stop from there. So let's have the format. So let's have the format. Format of PP. So we'll have detail here. The assets, you can start by writing land, plant, motor vehicle, and total. Don't look so many examples, total. So we'll have balance brought forward. And then in between the year, maybe we have acquired one of the assets. So we'll have acquisition, maybe of land. We didn't acquire that. We didn't acquire, we get the total. We also have the revaluation. Maybe we have revalued the land upwards and we revalued the plant downwards. So that's why we are taking it as a negative. We've done to that, and then we will have the final there. Disposal. Disposal. We say disposal is we are selling an item. Maybe we have disposed of the vehicle. So we put, if you put credit in accounting, it's means you are subtracting. So I hope you know that concept. Now, at the end, you'll be able to get what is called the balance carried forward. Balance carried forward here. Balance carried forward. So that's the first part of the PPE schedule. And then we will have the second part, which is the depreciation. It is continuation. Depreciation. So for depreciation, we'll have balance brought forward also. Then we'll have depreciation during the year. Depreciation. Depreciation of the year. Oh, sorry, we don't depreciate land. We don't put the balance brought forward for land. So we start here. Yeah, good. We go to depreciation. Just write depreciation in target evaluation. So maybe that is the depreciation due to the revaluation. You write revaluation. So maybe again it will go to my value, and then depreciation due to disposal. Depreciation due to disposal. So that at the end you will also get the total here. This is what we call balance carried forward.
So I have a question. So for a plant, we can't revaluate a plant.
Plan.
Yeah,
You said you can't evaluate.
evaluate.
No, we can. So we can't do the evaluation of all the items except only for depreciation, which you cannot depreciation for land. But you can do evaluation of all these assets. I was just putting as some sample, but you can do the evaluation of all that. Now at this, so we will get balance or as first of January, let's say as of January 2025, and we will have as of that 1st December, that 1st December 2025. Now, this one we call it A. The first one we call it A. The balance brought forward. Balance carried forward we call it B. Balance brought forward for depreciation C. And carried forward we call it D. Now, for you to get the balancing as of 1st of January, we will take A minus A minus C. A minus C. And then for that first December, we will take B minus D. B minus D. So that's what will give us the closing balances, which we will also put it here. So that is the format we are going to use. So tomorrow, we have class tomorrow. Or you will give me your schedule so that we start doing the illustrations of that. So any other questions? Any questions? Maybe the same topic, other topic, any related question?
No. No. Maybe one question on something that you mentioned on